Dr. Posen, I want to rip up the script right now because the Wall Street Journal has the article for 2019 on its right-hand column today, and that is finally the cash call on tax reform. We've got a 63% increase in debt issued here into this year by the federal government, and we're doing that on 7% less tax increases in July. Are we at a tipping point where rates surge because of our legislative process?
Not a tipping point, Tom, but you're absolutely right to flag this, as was the Journal. At some point, when you take in less money, you should be spending less unless it's a temporary thing. But this tax spending, which is what it is, all these giveaways on taxes and the spending bill, are just not based on any kind of reasonable revenue projection. And so we're starting to see the gap widen.
Right.
It's not the turkey chart you talked about, but they're talking turkey on the rates.
Well, maybe not turkey. We're going to do turkey later. I want one more question on this, Francine, and we'll get back on your important interview with Governor Carney. Adam Posen, Robert Samuelson at the Washington Post wrote a fabulous book a few years ago on our fear of Walter Heller inflation of the 60s. Are we going to some terminal rate that's okay? Or is there a fear here this morning that we go back to a Heller-like inflation of the 1960s?
The fear is there, but it's not justified, in my opinion, Tom. I think it was a good book by Bob Samuelson, but it is not the relevant book for right now. Everybody, including obviously Governor Carney and Bank of England, is seeing the inflation ghosts everywhere. And I think the last 30 years, 35 years have shown us that it's wages and innovation and trade that are driving inflation, not these monetary factors the way people think. And as a result, I'm not worried about the inflection point. I'd worry a little more about real interest rates in the U.S. when we're busy spending so much more than we're taking in at the government.